Welcome everybody, it's Stuart here from Hot Forex. This is our intraday trading strategy webinar. Obviously questions more than welcome as we go through this and at the end. So let's get started. Thanks for your time everybody. So disclaimer before we get going, this material is provided as a general marketing communication for information purposes and does not constitute independent investment research. Nothing in this communication contains or should be considered investment advice or an investment recommendation, or indeed a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. So there you go, that's the admin out of the way. So lots of new names in here today, very busy session we've got today, so hopefully I'll be able to help everybody. So my name's Stuart, those of you who don't know me, my background, I've done lots of different things in my life, but my background was predominantly in the City of London. I've been trading and investing my own money since September 1997, and four things I've learnt very quickly. Actually, it hasn't taken 20 years to learn these things, but I very quickly learnt when you're trading, as well as investing as well to an extent, but when you're trading in particular, always do what's probable. Don't overcomplicate it. Keep it simple. Look at multiple time frames. We'll touch on that a bit today. But by far the most important thing is to know yourself. And again, we'll touch on that a little bit today as well, because intraday trading isn't for everybody. Whether you're a scalper looking at 1 minute and 5 minute charts, or intraday looking at 1 hour and 4 hour charts, if you can't look at the charts all the time, there's no point trying to trade off 15-minute candles. If you can't look at the charts all the time, you can't look at, if you're only going to look at them a few times a day, have a look at the 4 hour candles and wait till they're all finished, or all, each 4 hour candle is closed before you make your decision. So anyway, so let's crack on. So we're going to look at my approach to the 1 hour time frame. That's the one I use intraday particularly, but obviously 4 hour as well. Daily is my main trading platform. Time frames, discipline, energy, patience, all those sort of things, old-fashioned boring words, but you need them all, particularly discipline and particularly patience. Whether you, as I say, it doesn't matter what time frame you're trading on, you need these skills as well, or these attributes to your personality. What I do intraday, some books and questions at the end. So let's get going. So, as I said right at the beginning there, are you designed to be an intraday trader? Whether you're a raging bull or a rampant bear, thinks things are coming down, thinks things are going up, what sort of person are you? What sort of psychology have you got? Again, I spend a lot of time talking about this on the Mind Games webinar, and it is really, really important because if you're not cut out for these shorter time frames, physiologically and mentally and even physically, there's no point, because ultimately the market will, take your money off you basically, and that's what we don't want. We want you to be successful. You want to be successful. So you've got to fit your trading around you, the person, and you've got to really look at yourself and decide, can I flip from being a bear to a bull very quickly? Because that's what you have to do intraday sometimes. You think it's going to go up, and all of a sudden it turns around, and you're caught out, and the market's going in the opposite direction. So have you got the ability to be that flexible? Your volume is very low, says somebody. Let me just turn it up. Fixed. Oh, Jasmine, the problem was at your end, was it? Okay. It looks really loud at my end actually, so I apologise if it sounds too loud. But anyway, so have you got that flexibility to be able to flip from one to the other? Intraday trades, it's all about you, as I say many times. It's not the market, it's not your broker, it's not Hot Forex, it's not your EA, it's not your guru, and your mentor, whoever it is, and it's certainly not me. It's really about you. Ask yourself, are you designed physically and mentally to be a short-term trader? Some of us are, some of us aren't. Okay, and if it fits your personality, you like the speed of the quick trading, you don't want to be lying in bed at night thinking, what's my trade doing because I've left it open. Intraday stuff may be for you. There's lots of benefits to it as well. So I say, how do you see yourself? Are you the lone guy plodding his way in the river there, in the lake? Creating his own furrow in the big vast ocean that is the big vast lake that is the trading ocean. Have you got the ability to be able to step off the diving board and jump in? Can you take that step, or are you hesitant? And you can't jump off, you can't step into the trading world. So you've got to look at yourself in the mirror and say, yes, I can do this, or no, I can't, I haven't got the right. So I may be a bit more of a go with the flow, go with the trend. I may be a bit more of this this jellyfish floating around in the market, and going with the flow, going with the currents, and not in and out all the time. It's all about you. It's not about the market. So scalping, everybody talks about scalping in short term. Whatever you do, whether it's intraday, these notes are down to scalping, but basically it also applies for intraday stuff. So scalping is very short term, lots of frequent trades, typically 1 to 5 minutes. Just because it's fast, it's not always profitable. You're going to have a lot of attention throughout the day to take these scalping trades, but so it is with intraday. You've got to be able to sit down and decide when you're going to trade. You've got to watch the trade, especially if you've got a 15-minute trade on. You've got to be able to stick to it and watch it. If you're looking at these shorter time frames, you're looking at the high liquidity, tight spread sort of markets. Don't trade more than things that you've got to be able to see the screens on all the screens on your screen, or all the charts on your screen, I should say. So anything more than 10 is probably too many. 5, 6, 8. Look at them. Look at the high liquidity. The depth of the market. When London's open and the morning New York session after 6 o'clock GMT, the market slows down. The volumes go down. So you want nice tight spreads, nice high liquidity. So you want to be trading the London session. If that doesn't fit with your time frame, that doesn't fit with your the way you live and where you live, decide whether that works for you, or just pick a part of that time if you can't be trading all that time. As I say, stressful, lots of discipline. You've got to stick to your system. You need to have a good internet connection as well if you're trading intraday. Obviously, if you're only interested at the end of day, you don't need to pay for a feed. Sometimes you just look at the end of day chart and decide what to do. Obviously, if you're trading intraday, you need to be able to make sure your internet connection is up, it's reliable. Look at our VPS service. That's what it's for, dedicated VPS, especially if you're if you're trading under the 1 hour time frame. Obviously, the beauty of trading like the 1 hour or the 4 hour time frame is you only need to check every hour or every 4 hours. Ghazi says, I can't do scalping, swing is best for me. Exactly. So it's all about what sort of person you are. But intraday stuff, lots of people are interested in it. Lots of people get interested in scalping because I think it's quick and it's profitable. It tends to be quick and profitable for you. But anyway, so 5 or 6 key steps, okay? Whether you're a scalper down at the 1 minute range, or you're trading off the 4 hour, 1 hour, and even the daily range. So look at if you're trading intraday, look at the majors. They're the key ones you want to look at. And we've got that on our website. So here we've got the major crosses. Obviously involves the dollar, so that's why we talk about the dollar all the time. What goes on in the US, what goes on data-wise in the US, what the US government says, what the US president's saying. They're the majors. Others include the euro and the pound. Obviously the pound yen, lots of people like to trade that, but obviously as you see here, the spread is a lot wider. It's called the widowmaker for good reason. It can be very, very volatile, especially as Tokyo's closing and London's opening. But these are the high liquid pairs. These are the ones with the tight spread. So these perhaps the ones you want to be looking at. Obviously, if you want to trade oil and gold, you can, but obviously be aware of the wider spreads and gold, the lot sizes on oil and gold and what have you. So you've got to take all those things into account. And the other key thing to bear in mind is, well, you don't get caught out with these correlated trades. So if you've got to be aware, if you're long the euro and short the dollar against the yen, if you're long euro dollar and short dollar yen, you've doubled up your risk. You're on the same side of that trade. So you're looking for the dollar to go down there for those two trades, obviously. So look at the markets you're going to trade. No more than 8 ideally, because 8 might fit on your screen quite nicely. So what's the market doing that right now? So you open, when are you going to trade? Look at the trading time. So is the market going sideways? Is the market in a trend? That's what you want to be looking at. Me, I'm more of a trend trader. So and overnight at the Asian session, markets tend to go sideways because of the lack of liquidity. They tend to keep in a tight range. The big kickoff happens at the London Open and the New York Open, excuse me. So if the market's ranging, there's no point trying to use trending tools. If the market's trending, oscillators aren't going to help you. Okay. So me personally, I tend to look at more I'm looking for the trends. So I'll rely much more on moving average and moving average crossovers and my RSI. Range traders will look more at the oscillators, the MACDs and the stochastics moving. So as you can see, so for trending, we're going up. This red line for ranging, the green line. So trend, range, trend, trend, range, trend, and that's this just happens whenever this was from. I don't know, November last year. 5-minute chart on the dollar index. So again, regardless of the time frame, look at what's happening at the market now. So take a step back. A great way to do that is to look at our let me just see if I can bring it up actually, if it's going to work for me, is to look at our traders board little product. Hopefully you can, let me just see if I can bring that in. So what traders board shows you is basically what's going on now. What are the key movers in these key major charts. So here from some midnight last night, this shows us the euro's out of favour, the Aussie's in favour, so it's up against all its major peers. Euro's down, Aussie's up, dollar's a bit mixed, euro down, so euro down, so euro Oz will look like it's, that's perhaps the key move. It's moved nearly 7.71%, so that's the mover today. So if you haven't got an idea, use that. It's a great little tool that just gives you a quick heads up of what's actually going on. So on the particular market you might be wanting trading on. Personally, I've got some questions coming in here. I can't do scalp, which is best for me. Well, you say, Gazi, that's fine. Personally, which time do you use to detect what market is doing right now? And I don't quite understand that question. Let me read that. Personally, which time do you use to detect what market is doing right now and why you prefer it? Well, the traders board is a good heads up. Okay, what's gone on? So let's just bring that back in again. So what's happened since midnight last night? Actually, can everybody see that? Okay, I'm not talking over it. Okay, so the euro's there's been some negative news about the euro. Which is why it's pinned down, although the GDP figure was actually quite good, but there's talk about rattling around about the QE situation. So Aussie had some good data overnight, so it's held up overnight basically. So that gives me a head up. But what I tend to do, Situ, is actually look at the hour time frame, and we'll come on to some live charts in a minute as well. I wasn't going to do that. We'll do that if we get through this. Like we do with 20 minutes in already. So look at what the market's doing right now, whatever time you come into the market, bearing in mind that the deep liquidity, the big movement is the London session, the London day, and the afternoon and the morning session in New York. How do you use Hot Forex Traders Board to choose the pair for your trade? Well, just like that, right? All the Traders Board is giving you is the strong trade, the strong currency and the weak currency. Remember, when you're trading, you're looking for the difference. You're trading the difference between the two currencies. So the market might be saying, or you might be hearing on the news, on CNBC or on Bloomberg or on your local broadcaster, that the dollar's strong. Well, that's fine, but if the euro's also strong, the difference between the euro and the dollar, one will be a bit stronger than the other, but that isn't what you want is a strong currency and a weak currency. That's what you're looking for, and that's what Traders Board gives you here. Let me just bring it back in again to answer your question. So what the Traders Board showing is the relative strength. That's what it is. It's compared to its other so these are the 8 majors here we talked about. So relatively today the euro's weak against everything. Excuse me. And particularly against the Aussie dollar. And you can see here, we look at the Aussie dollar. The Aussie dollar is relatively strong against everything, and particularly the euro and the Swiss franc. So that would immediately say, well, let's have a look what's going on there. So that trade there would be long. That's suggesting long the Aussie short the Euro Aussie, because that's the way it's traded around. But if the spread's too big on that one, remember I was talking about trading the majors. Again, you have to check that if it fits your risk criteria. Okay, so that's how Traders Board can help you. I'm not saying just stick to the majors, but if I trade all 28 of the crosses, but beware of the spreads. And I'll come on to that in a minute on my next slide, I think. Hang on. So what's the market doing? And then look at the multiple time frames. So when I'm trading, I tend to, with my own money, I look at the daily time frame. That's my key time frame. Okay, but intraday stuff, you need to then look at where those support and resistance levels are on the daily. And I'll tend to put on my intraday charts my daily and even sometimes 4-hour support and resistance levels as well. And you'll see if the 1-hour chart gets to that daily support or resistance, that's a really strong area for having your stop loss or having your target to. So look at the big time frame and then zoom in. As I said there, look at the big picture and then zoom in to see whether we're going sideways, whether we're trending, and then look at the lower time frames for perhaps giving you possible entry points. But that big point there is decide on your trading time frame and stick to it, because many people fail again because they for many reasons, but one of the key reasons is they'll switch between different time frames. And just because you've got just because it's the market is long on the daily time frame and still going up, it doesn't mean that intraday there could be a big sell-off. You can be very profitable going short on the 1-hour time frame, even though it doesn't actually affect the daily time frame. So stick to your time frame. Decide on your trading time frame and stick to it. And deciding on your time frame is dependent on all those things I've already talked about. So your personality, the time you've got to actually sit and trade, and also how long you want to be sat in front of your screen looking at trades as well. Okay, and the risk level. Obviously, in the lower the time frame, the more significant the spread becomes, and also the higher the stress level becomes, because you're in and out much more quickly. Your targets are shorter, tighter, and your stop losses are tighter. But you need to be doing more trades to justify the time frame. So part 4 is to position the trade. So you drill down to the lower time frames, and then I'll come on to the actual indicators in a minute, but I tend to use the moving averages, whether it's the 5, the 20, or even the higher time frames, for my support levels. So I'll explain all that in a minute. So tend to look at, if we're broke, when I'm looking for a trend on the trade, which I tend to, I'll use my targets and my ATR as my stop levels. I've put an arbitrary 10 to 15 pips here, so place stops just below these support levels. Don't just put these arbitrary numbers in, these 10, 20 pips. Look at where the real support and resistance is. Okay, and we'll look at that. And the ATR is the average true range is at any time frame is a great one for looking for targets and stop losses as well. Certainly targets. I use it a lot for targets. Some people say to me, well, you could, once you've identified the trade, you could have let it run. Well, sometimes I'll get in a few times on the same time frame using the same ATR. But anyway, we'll see that when we look at the markets live. So, this is probably the most important chart you're interested in. Right, this is how I started with my intraday stuff. Okay, I really like the moving average crossovers. The big drawback of moving averages is they're lagging, particularly lagging. So I'll use the 150 EMA and the 5 EMA. So the 150 is obviously way higher than the 5. So we're looking for crossovers of these very extremes on the moving averages. So the EMA, the exponential moving average, when I'm trading on the 1-hour and 4-hour charts. Now then, I'll use the 5 EMA sometimes as a proxy for the price. Okay, and what I mean by that is if the price is below the 5 EMA, the price action is happening below the 5 EMA, I will tend to only take short trades. If it's above the 5 EMA, I will tend to, most of the time, only take long trades. Obviously, these guys cross very rarely, but when they do, it can be quite significant. I'll also use on my Bollinger Band setting as well. Just to jump. Remember, Bollinger Bands are just measuring volatility, but the middle line, one of my again, at all the time frames I trade, I love the middle line of the Bollinger Band, the 20 period moving average It's a simple moving average here on this, so we've got simple and exponential mixed up here, but I'll use that also. I'll tend to use that as a support level as well. Okay. Now then, I'll tend to much more use, and my oscillators, I just use them as backup. So these are my main ones, and I'll just use this as backup because I'm looking for trends, and I like the trend trading. If you're looking for both trends and ranging, the oscillators become much more important, and this is when you want the MACD and the RSIs perhaps set at, I say 7 here. I tend to be honest, I tend to leave it at 14 still. But remember, we're looking for the key thing with the oscillators is divergence. Divergence doesn't come up very often. It's great for, standard overbought, oversold, but divergence doesn't come up very often. But when it does, it gives us a real heads up because it can be much more significant when divergence appears on MACD and RSI. And I'm assuming everybody knows what I'm talking about when I talk about divergence on the RSI or on the oscillator indicators. Okay, so 3 settings. I tend to use these 2 more: moving averages and the crossing of the moving averages, and the Bollinger Bands and the crossing of that. And this RSI tends to be my backup. And the charts I'm going to show you in a minute tend to have it set at 14 rather than 7, but 7 can be quite useful as well. Obviously with 7 you'll perhaps get more indicators, but because they come out standard at 14, I tend to leave them set as they are. Okay, is this all making sense so far? I hope it is, and we'll bring up some examples. So risk is everything. Let me tell you what, before I go into the talking about risk and reward, let's bring up some charts and let's see what I'm talking about, because there was a really good example this morning. So here we are. This is an example of how not to trade intraday. What's wrong with that chart? What's wrong with that screen? Well, there's too many windows on it for a start, isn't there? So let's just try and tidy it up a bit. So tile it. So lots on there. So let's get rid of all the ones we're not looking at today. Not looking at that. We're not looking at that. Not interested in that. We're not interested in that. We'll leave the CAD up, but we'll change the time frame. Yen, euro, oil. I like oil. Sterling. Oil's on twice for some reason. Why is oil on twice? I must put it up yesterday. Copper. No, not copper. Not on the ZAR. Gold. Like as a backup. Aussie. That was for my daily. Euro CAD. That's a daily trade. So let's have a look. These are the ones that we're looking at now. That's up time. So let me just bring up this. This is one that I took this morning based on what I've just been talking about. So, right, there are other indicators on here because this is from. Actually, it's not. This is the wrong profile. Sorry. Just ignore it. So my intraday moving average crossover profile. Let's just bring that one up. I knew that didn't look right. Elizabeth, you can't hear me. Can everybody else hear me? Yes, Rama, thank you. Elizabeth, it might be your end. Some of the people are saying there's a fault. So let me just tidy this up. So hopefully you can see that. And we'll go through so this is my intraday stuff. Some are black and some are white. It's just I haven't changed the background on them, so I apologize about that. Window, tile. So this is a trade I took this morning based on what I was talking about my ATR and what have you. So I wrote a little video about this morning as well. So let's just go through again what we've got on here in my settings. Okay, so Bollinger Band set at 2 and 20, 2.5 and 20. Okay, the grey line here, should I make that a bright? Let's change the colour of that. Is this 5-period EMA indicate properties? Let's make it bright yellow so you can see it. Okay, so the 5-period EMA. Remember what I said about the 5-period EMA on these intraday charts? I'm looking to, I tend to be, when it's below it, I'll go short. When it's above it, I will go long. So this morning, let me just, and this one here is the, is this a, yeah, 100. So this is the 150. So they crossed way. Let's go up to the. So they crossed on the 4-hour back here. This is the 4-hour. Remember we talked about high time. So this was a short position here on the 4-hour. This was the 12 o'clock on the 8th of August, and it's been short ever since. Simple. See how good moving averages are when you look back. On the 1-hour chart, they crossed way before then. Well, similar. Zoom out. the actual cross there was way back here again. This is the 3rd of March. So yeah, say we can't use this on it, but so we're short. We're definitely short. We're going down. We're going down. Going down. 3rd of August, I should say. So down, down, down. Okay. So let's just go back to the 1 hour, and so the longer term is still down. The shorter term one. Let's take that off for you. Sorry. The yellow. So that's the trading one we're crossing. So again, we can use the. So we're short generally because of the 2 is. On this hourly chart, so we broke over that, so that would have been perhaps a long position as we broke over the midpoint of the moving average, and the yellow was up. We were above the yellow, so off we go. We're long, we're still long. You know, our target would have been based on the ATR here, 17 pips. We'd have hit that one. Okay, a break short would have been this. Now the yellow crossing the 20 here again. And we're short again ATR. I'll come to the target setting in a minute. So we're short. So we're still short because we're under. We've got our target. We've spiked up, but we haven't gone over the 20. So still short. No advantage. And then yesterday, yesterday or the day before 15th. Yesterday we had this big sell-off. So again, some short positions were taken, and we could have gone in a few times there as we were continuing. See how once we broke under this 5 yesterday, we never got over it as we went down in the 1 hour. So it was a big sell-off. So every time you came back to this, if you were trading this you know, in a very, very disciplined manner, and you came back and looked at it every hour, you could have added to your position there, because that was still short. It was still short. Yes, it was outside the Bollinger Band. Yes, the angle was going down, but the negativity was still around there. So waiting for the floor, and then the floor happened. Overnight we went sideways, and then this morning, I don't know if you can see this. This is before the news came out this morning. This is another short example, and I took this one this morning. So the yellow 5 crossed below the 20. I got in here at the close of the 9 o'clock candle there. My target was very simply the ATR, and I love the ATR because it keeps you grounded, I say. Yes, the red line is the 150 EMA. Yes, but it's not relevant on this one because it's clearly that we're still short, so that's keeping us the right side, and that's what moving averages do. And even the 20 here, the 20 is kept us the right side of this one. This is a bit, obviously, yesterday was a bit of an odd example because we had this strong move, but I'll come on to even this morning. So this morning, short entry at this point at 128.54. Where would my target be? Well, I like the ATR, so that's why I always have it on here. Set at 14. We'd been going sideways, so we weren't doing very much, but the trend was starting to fall. You could see the opening, we'd gone down, so we'd start to create a trend. We started to move, so the trend was starting, so that was enough. And I knew there was perhaps enough in that. So, you know, ATR at that point was where here, so we were about 10 or 15 points, and there we go. We got 15 on that one, didn't we? 28.53 to 24. Yeah, so it was about 8 hours. About, say it's currently 17. It's about 15, I think. I averaged it out when I took that, and the energy was down, and we took that spike out, and then it created that. Then it became interesting. It's created a fractal low. I tend not to use the fractals on these intraday, but they're still on there. Okay. Somebody's asked about creating support and resistance on the daily. This is intraday stuff, but let's just answer your question, Beatrice. So what you do for identifying support and resistance on the higher time frames is do that. You zoom out. This is what I do. You can find support and resistance on, through various websites. I know FX Street give you the previous day's support, pivot points, R1, R2, S1, S2, S3 and all that sort of thing. I tend to do it manually just by having a look at it myself. So clearly, today, we've come right down to this support level on this particular chart. What we're looking at, this cable chart. So clearly there's support here, or there's been support here. The next support is this clustering of around here. So it's really, the best way I say is actually to do it yourself and manually draw them, okay? And you'll see it. If you can't see it, don't do it. So there, that was a previous high. Let's assume we're looking at this side of the chart. Here we've got to this high. So this has been resistance, and we went down, and then we came back to it again. Look at that. And it formed resistance again. So that was a strong resistance. This time we've burst through it, came back to it, came under it a little bit, but off we went again. And same, it's still valid, because look at that as well. There we can still see. Let me just put that on. So when it came down, it went through it, but it tried to get back to it. So that, which was resistance going up, became support as you were going in the downtrend. Okay, can you see? Hopefully you can see that. That's quite a clear one there. So that would be, you'd mark that then at 130.44 is quite a clear up at the daily time frame. So then what you do then, let's just do that from before. So that has become, resistance, broken, support, resistance. So that's a top level, 130.26. So then when you scroll down to the lower time frame, you can see that's 4 hours, it's a long way from there now, and 1 hour it's even further away. So strong resistance up there. So what we do now is down at this, so the green line here is a support line in this 1 hour chart, because this was the bottom of this, or probably a bit further down there, isn't it? Or around that. So I've put this one here, 128.54. That's where we got in. Sorry, that green line is where we got in. It coincides with this sort of congestion level here. So again, and obviously the good news this morning has helped that to break off back up. Anyway, this was just an example of how I trade these trends with these crossing. And also, let's just finish that story, because the other thing, obviously, when you're trading intraday, the news can be absolutely killer, either positively or negatively. So you really need to know your economic calendar. So what happened here was, so we'd taken this short trade at 9 o'clock. We knew the three big bits of news today. One is the UK jobs numbers. 2 was the GDP out of the euro area, and 3 is the FOMC minutes later on tonight. So between now and tonight, there's not great a deal of data coming out of the US, and we'll all be waiting for that. So what's happened here? Yes, we had that successful trade there on the 1 hour chart. Then wait. So all this theory now has been blown out of the water, because we had this big strong up candle, because it was a really positive jobs number for the US, sorry, for the UK. So it's realigned all the the indicators then become a little bit irrelevant, because it's been driven by the fundamentals, by the news. What's the news told us? Well, a candle here, the price action, is telling us it was positive, because big candles, as I say all the time, are much more significant than average size candles. So this was a very significant piece of news, and very typically we've had a very bullish reaction to good news, and the last 3 hours have come down. So we've retraced. We're back under the 5 period moving average, but we're supported by the 20 moving average. So this is still positive on this chart. Okay, where are we in here? We're at 1 hour and so there's 20 minutes before this completes. I wouldn't be surprised if this broke below the 20, but as we're still in this big solid support line here at 128.60 zone, this is still a positive pound dollar chart for me, because you expect big movements like that to be retraced a little bit. As long as it doesn't go much over 50%, that's still positive. So this is still bullish for me, because this 20 period has held. Yes, we've gone under the 5, but obviously let it form, because it's been skewed by this huge fundamental news, which was much better than expected. So that's why, if you're trading intraday, one of the big things you need to focus on is the news, and be prepared to get out of your trades like we were here. We traded it before the news came out. Get out of your trades and then get back in if the news has either confirmed the action or unconfirmed the action. Here the news is very positive, and so this should move up and retrace this big move down it had yesterday somewhat, because of this sideways action overnight. So again, the hour, we'll come back at the end of the hour, see where the cable's finished, but it's still looking relatively positive to me, even if it closes under the 20 period here, because now we've sort of gone sideways. Again, remember the moving averages aren't great indicators, so we might want to look more at the oscillators. What's the oscillators doing? Well, the RSI is 43 and it's neutral and sort of going sideways, so you could perhaps trade that range there. Now it might be back in the range there, which the fractals are giving us here. I didn't mention fractals earlier, but sometimes I leave fractals on the charts as well. Okay, so that's a typical way I look at intraday trading. So I use the ATR as my target, and sometimes also stop loss area, or the Bollinger Bands as stop loss areas as well. Okay, so let me just minimize that one. That was just an example I'd taken this morning. So let's have a look at something live then, with the same theory. Let's have a look at the well, let's go through them while we got them here. Okay, so euro, what's the euro telling us? So again, we've got so here on the 1 hour chart, the 20, well, I haven't actually got, let me just insert the 5 for the yellow one. Okay, so we know we're short because we've broken through the 200 period. So we were short from yesterday. This was looking short on the 1 hour, big close down there from yesterday. There's the cross there. So we've been short. We're under. Big sell-off yesterday at the US opening. Very positive dollar. Euro regained quite a bit, so we were positive, but went sideways overnight, but relatively positive. London opens, and the market makers are trying to find out what's going on. But see how we hit that resistance there at 117.47. I've already got on the chart the big blue line, which happened to be a fractal high as well. Fractals are good as well. Sometimes I'll have fractals on the chart that perhaps less reliable at the 1 hour chart. That's why I don't actually sort of say that I use them all the time, but I really like the fractals as well. So here broke through the 20 underneath the 5 through the 20, and at close of that hour that would have been a clear short position. But again, the problem was that with that this morning was there was some good news and some bad news for the euro, so you would have been stopped out on that one, because obviously your stop would have been something like that, so you'd have been taken out on that one, but the direction would have been correct because you would have ended up back down there. Okay, so let me just go through that again. Do we see that logic? So breakdown, entry would have been here, but we would have been stopped out because of this big spike up here, but the direction would have been correct. Would we have got back in there? Well, possibly, but there's lots of volatility because the next hour, this is all news coming out of the euro area about the GDP. Yes, it was the GDP figure, wasn't it, for the eurozone? But it's generally been weak. Okay, so again, the RSI, the ATR isn't on this. I don't want a new chart. No, insert. Okay, so again here you can see the ATR's here, so ATR 16, so again probably we would have been stopped out there because it would have gone up there. This one's a bit volatile, that wouldn't have worked there. That one would have worked as we've come down, so keep it simple. Ghazi, will the pound, that's why I just said it looks like it might. Please, how does the ATR confirm your take profit and stop loss Ken fact? Right, let me just show you now. It doesn't confirm it. I just use it let me zoom in a bit, as a way of setting targets. So let's use this one. So we've broken there. Okay, so let's see what would have happened there. So the end of that's looking negative, isn't it? It's under the 5, it's under the 20. We're going down. Okay, but we had that big tall wick. So ideally, and again, this is all down. We come down to risk management. I'll talk about. Ideally, your stop loss should be up there, but your target will only be from the. So if we'd entered at the end of that hour there at 117.15, my at the time, the ATR was about, what's the ATR saying? The ATR is giving us 14 pips. So 14 pips from here would take me down to 17 here. 17, this would have been our target down here. So we would have entered here, our target would have been here, and ideally our stop loss would have been here. Okay, so that one would have worked. Okay, so we got in here, simple target would have been hit during the hour, because our stop loss ideally would have been up here. But whether you would have had the what's the word, the wherewithal or the risk appetite to actually put your stop loss up here. And to be honest, if I had taken that, I would have probably had my stop loss around about where this thick blue line is, because that's a previous higher time frame resistance level. So that one would have worked out. Okay, so entry here, our target here based on the ATR, and off we go. Thank you very much. So we would have perhaps had another opportunity. We wouldn't have obviously taken that. We may have had would we have had another opportunity there, thinking it was still going lower? Well, quite possibly. So we could have entered there again, because we're still below. So that would have been another entry again if we were trending lower. So we could have had another entry on the last hour. It's as valid as anything there. Now then, the reason we might not be getting lower, because we're approaching the low of the day. We're also out of the Bollinger Band. Okay, so that might have put me off taking that one, having just had a successful move down there. We're out of the Bollinger Band, but again, what's stopping us? RSI is a bit overbought, so I may not have taken that second one on the close of that last hour. I haven't got that call there. So, but the trend is still down. We're still under the 20. We're still under the 5. So it's probably probable enough. The only negative is that the RSI is quite low now. So that again, that could be a trade. Now then, the other reason for perhaps not entering there is the fact that this is a big, strong support area, because we're at this round number, the big psychological round number, 1700. Rama, the purpose of the 5-period EMA, Rama's just asking what's the purpose of the 5-period EMA, is to keep me on the right side. So all I use the yellow line for there on there is a proxy for the price. So just imagine the candles were on there, okay, and I've just got the yellow line. So I will not take, it's an absolute rule, but most of the time, 90% of the time, if the price is below the 5-period EMA, I will look to sell. If it's above the 5 EMA, I'll look to buy potentially if it's strong enough. Obviously here nothing was happening because it was overnight and there was no action there. There was no volume. There was no big candles telling me what to do. The other thing about this entry on this candle was that we had a strong wick and we'd rejected that high. So that was another. So you could argue that this one, the white one here, has cancelled that out. So again, that might have been a reason for not entering at that, and I might have talked myself out of that particular trade at the end of that candle. But technically, it ticks a lot of the boxes. So again, you could have gone short there, but it's the psychological 1700, and that was the big low the other day. So we're in the downtrend, but it's likely to hold this 1700 for a little while. Darb was asked, on the dollar, the GDP year was better than expected. There appears to be no reaction. It wasn't better than expected, Dowdy. It was actually in line, the Euro Q2. It was the more concentrated on the quarterly, so it's more in line. Remember that the sentiment is the other thing that rides over the market. So the sentiment is still perhaps dollar has turned around for the dollar in the last few times. There is a white candle above the EMA 5. Is that a buy call? I'm not quite sure what you mean. Did you mean here? Did you mean there? Or there? It may have been, yes. But as I say, not all these things don't work out all the time. But again, you'd have to see what time of the day that was. It was below. Remember, although it's above the 5, I'm not saying buy it just because it's above the 5. It tends to be a buy. So, but it hadn't got, hadn't got to above the 20. That might have been more of a buy, but it was at 3 o'clock in the morning, and I wouldn't have been awake then to trade that. Volatility is very low, and it didn't actually get much higher, did it? I suppose it got to my got to my daily resistance. So there you go. It just proved a point. So that one that one would have worked. that one wouldn't have worked. It didn't go anything. It didn't actually do very much at all, did it? So until it woke up. So that's the problem. That's why I talk about trading volumes. If I'm using fib levels for entry, how do I draw the fib on a shorter time frame or the one? It's the same, Lynette. It's the same. You're drawing Fibonacci's on whatever time frame you want. So here, draw on the chart that you see. Trade what I always say as well. Trade what you see, not what you think. So people say, well, where do I start my Fibonacci levels? Well, here, let's get rid of that. It's a bit it's more difficult on the shorter term time frames with Fibonacci because you don't know when the trend's actually ending. But here, a simple Fibonacci retracement could be from the highs here, the trend is down to there. If you'd caught that yesterday, if you caught yesterday's floor at this sort of time, 2 o'clock, and since then we've retraced 23, we've retraced to the 38 and rejected it. There you go. That's an interesting one, isn't it? See how that it does it all the time as well, this sort of thing. How that Fibonacci level just on, we didn't pick these, and that's what Fibonacci does all the time. It coincides with some other things that we had. So my big strong daily resistance there, that 38.2 Fibonacci coincided with. So that's a great retracement level. So that's a great entry for a short position, because you can see that's a really strong. So that would have been a good potential short position. This one, because we in a little pin bar. Even though we're above the 5 and it was saying buy, but that's because we know we're down generally, and so you would perhaps wait. So it's rejected that. Next big, that would have been your entry there. That would have been another really good entry point based on the Fibonacci and based on the moving averages, because we've closed below the 5, the yellow one, and the green, the 20. So that's a big strong entry there. But again, that's at some quite early time this morning. What time was that? Was that 8 o'clock, 7 o'clock, 9 o'clock this morning? So again, you could have taken that. That's a strong short position there. But again, market makers, opening the market, you would probably been stopped out because this spiked all the way up there earlier. So wait for the later one and then move it down. And that's what we did. I waited for that one. So indicate was there and then we got there. Okay, so that's how you put on Fibonacci as well. But don't end up with a cluttered chart like we've got now. Lots of things on there and what are the lines. So when you put your, when you're putting your daily support and resistance lines on them, pick a really different color so that that's the daily support and resistance. Make it thick or make it dotted like we've got here. Okay, I hope that's clear and it's all getting a bit messy. So basically, the smaller moving averages would work in small time frames depending on candle formations and also the RSI and MACD. OMID. Remember, let's take a step back. Moving averages are exactly that. So the smaller the moving average, the smaller their sample size. So a 5, that's why the 5 moving average is much closer to the price action than the 20 moving average. Okay, let me just take some of these stuff off here. I'm explaining that clearly. Let's take some of these lines off. So taking all the lines off. So the moving averages here, we got the red one, the higher time frame, tends to be flatter. The green one, so it's 200, 20, and the yellow is 5. So obviously the closer to the price action, the smaller the moving average. So the more volatile it can be as well. Okay. RSI, MACD, you can do that, but yes, that's your sample sizes. It's the same thing. Okay. So you can do the same thing for all these, and then if you I trade off the 1 hour, so I will look at these every hour, see what's happened. So let's just take another example. So here, Aussie, I hope you can see this. This is white. What time are we on? No, 5 minutes left. So Aussie here, positive. The 5 is here. We got the white chart. So the 5 is the blue line. The green is still the 20 period. RSI 50 and rising. So blue crosses from below over the 20. That's a buy signal. It's very strong. And we didn't know it was very strong at the time, did we? But very simple, strong. Obviously, relatively though, it's negative simply because we're below the higher time frame, the 200, the 150. But so that 150 moving average is going to provide some sort of resistance to this move up at 78.70, and it looks like we put in a very nice little tweezer top there after this rally up. But it's still supported by the 5, but we're now getting a wee bit overextended, as you can see with the RSI. The RSI's touched 70 there as we've rallied up today. The Aussie dollar touched 70 and turned around, created a tweezer top, and that would be a potential short position. Why wouldn't I take it? Because we're still above the 5, and although it's overextended against the 20, it's still looking quite positive, but that's looking like a possible short position. So how do you know if we got a short position? We'll be looking down at the lower time frame for some. So let's just put a line on that for some sort of pin bar action to give us an entry on that the lower time frame. So that's our hour candle, or our last hour candle that's completed. So down at the 15-minute, we were looking to perhaps look at one of these pin bars as our entry. So we may want to get in there. 15, it's just broken there. So if this stays below there, you know, down here on this higher time frame, because at the hour time frame we've rejected this resistance up here, remember. Let's just put that on. Okay, so that's our rejection of the hour. Let's just go, let me go back again. Make sure this is all clear. So that was we've had a good run up. We've hit a top here by looks, so because we created a tweezer top. Resistance is at the higher time frame, so it hasn't got to that. We've rolled over quite aggressively, quite a big candle compared to the ones we got. It might just be a retrace on the 1 hour, but intraday, lower down, we might have some chance of some trades there. So my thing won't move. So there, so we've had the move down, move back up, and now, you know, we were under the 5. Yeah, we got to it. We didn't get over it very well, and now we've broken through the 20 as well. And so that would be on your 5 intraday stuff, your 15-minute candle chart. That might be your action. That might be your entry there if this holds. So we'll see what happens. That's triggering a possible entry because we've broken the 20 and we're under the 5. But look what's happened. Down at these lower time frames, the 15-minute is having a rethink about going back over the 20. So again, we'd have to see where that finishes, because it only just broke the 20, wasn't strong enough, and now it looks like it. So again, you just keep watching that one then down at that 15-minute time frame. Okay. But on the 1 hour, it hasn't broken through under our 5, so we're still long. So although it's a sell-off, it's still quite positive. So the hour time frame is still saying that's positive, and we could be looking for another attempt at this high here. And that's it. That, you know, keep it simple. Don't overcomplicate things. Fars has asked me to have a look at gold, so let's do that. Down here at these, is gold on here? Why hasn't got? There it is. So we know gold's had a really good run in the higher time frames. We've rejected, and it's even on here, isn't it? Look at that classic tweezer top at 1291. We've rejected it. We've come down, and we've been weak, and we've been under the 20 period moving average on the 1 hour chart since 7 o'clock on the 14th in the morning. Okay, we went under it, we went over it a bit, and we haven't been over it since, have we? We have a little bit of a go yesterday, but again, so that's generally a sell position, isn't it? You know, you think, oh, we've had a really good run up, oh, it's down, and then the key, remember what our theories before, our next key was, this was our first heads up. Okay, so the shorter time frames had turned first, the 5 period. We went under it. Then now we're under the 20 period, and then finally, you know, a day later, 24 hours later, the 15th at 7 o'clock, we went under the 150. So again, that's confirmed the short, and that's why the energy's been added. Probably why we had this big down move here under 170. And 1270 now becomes our new pivot point here. So again, very clear moves there. Can you see how that's played out? Rally to the top, and again up the higher time frame, you can see, were we going to go higher? Well, these triple tops here, 12 big psychological 1290, 1, 2, 3, triple top, and over we rolled at the daily. So there's lots of money perhaps short here on the daily time frame, and they'll add to it when this 1265 level breaks, because that was a level we got in. And see how they're congested at 1265. So that's the daily. Down at the 1 hour, same strong resistance we identified there at 12. So we were looking intraday. We would have perhaps looked to get under that as it broke there. There you go. So the 14th. So again, the 14th at 7 o'clock, like I said. and then it was added to 24 hours later because we broke same time, 7 o'clock in the morning, 15th yesterday. We broke under the 150 period moving average, and we've gone down ever since. We broke the psychological 1270, couldn't hold under there, and now we're pivoting around there. So gold, from being positive, now becomes negative in the space of a couple of days. So a big move there on gold as well. So gold looking negative. Okay, so I hope that's been of some help. What is the ideal spread to look for in a pair as a beginner? Elizabeth, if you're trading intraday, you want to look at just bring this. You want to look at the ones that there's lots of other things I want to talk about today, but you want to be looking at these ones, these high volume, high liquid ones. Okay, so look at these, the major crosses, so the dollar crosses. If I have a positive open trade on euro, is it better to close the trade before FOMC or any major news? Rama, again, it depends on your time frame. Okay, if the news that's going to come out of the FOMC may not be that significant, and if you're trading on the daily time frame, I tend to leave them open. I don't really trade the news. But if you're intraday and you've got a positive euro trade, obviously get out of it before the FOMC news comes out. I can't tell you to do that, but that would make sense, wouldn't it? Because the volatility in news, like we saw with the pound this morning when the news came out, that was really positive, and then the last 3 hours it's retraced it, hasn't it? So that's what happens. What is the relationship between price action and economic news? Beatrice, okay, I'll come to that in a minute. Must we watch news every time? Beatrice, mine on the 4 hour. I don't know what that means. Oh, your trade's on the 4 hour, Ron. Well, again, yeah, I probably look to get out of that. Fundamental news, Beatrice, moves the market. Okay, the pure technician, the pure technical analyst will tell you that it's all in the price action. You don't need to follow the news. And I can see their argument, and I don't necessarily accept that argument, but lots of people just swear by it. They only look at the charts, they're not interested in the news, they just see news as noise. But news moves the markets, again, like we saw with the pound this morning. So what you should do is really just concentrate on the high impact, like I say at the webinars, concentrate on the high impact events and be aware of them, okay? And you decide, because it's all about, I haven't got my charts, but as I come on to later on, it's all about this chart, really. It's all about risk management. It's all about money management is everything. And so if you've got your stop loss set at the right place, above a support or below a resistance level, and it gets taken out, that's just what happens. But if your stop loss means monetary wise it's only a few percent, 1, 2, maximum 3% of your account, you'll be fine. Otherwise you'll end up emptying your account quite quickly. Okay, so look at the economic calendar, Beatrice, is my answer to that, really, and set your trading day around that. So what I'm saying about the economic calendar is this, that you see either it's on our site every day. This is the economic calendar, so be aware of it. See what I write every morning. So the big events are the red ones. They're the ones you've got to be aware of, and that's what's moved the market this morning. This one, see how this because this is what was expected, and it came in much better than expectations, and it's really moved the market. Sorry, this pound one here, and it's really moved the market. Somebody made a comment about the year-on-year being more better. Yes, it came in a bit more, and it was better, but it was this figure that they were concentrating. It's more or less in line. So sometimes positive news doesn't necessarily correlate just to a good move for the particular currency. So that's the other thing that you can't get too hung up on either. But it tends to be good news tends to move in the direction of the currency that it's traded for. So, but as ever, risk management is everything. So thank you. I hope that was useful. The theory is great. Anybody can tell you. Can talk about trading. Use these indicators. Use this approach. As I say, I don't really use the MACD on this particular approach, but it works for me. I like my moving averages. I look at average true range for giving me targets. The criticism of that is that your targets can be very close, your stop losses can be quite close, but it works for me intraday. But most of my trades, I'll caveat that, most of my real trades with real money are done on the daily time frames. Okay, so thank you very much today. You know, disciplined trader, again, this is I haven't got time to go through all of this now, but you know, as I said at the beginning, it's all about knowing yourself, understanding yourself, and dealing with losses that I've put up on here, and get used to what makes you tick, and thinking of percentages rather than winning dollars or winning every day. Understand the very basics as well. If you're new, you've got to understand spread, you've got to understand leverage, you've got to understand margin, you've got to understand lot size. If you don't understand any of those 4 key things, stop now. Go back to a demo account and get them drilled into your head, and understand that, you know, a very small movement at one end can be very much levered and against you if the market goes against you. So anyway, thank you for your time. Our next webinars have disappeared. Oh, here they are. So tomorrow, Jay from Blue Sky, or Kay from Blue Sky, I don't know who's doing it tomorrow, talks very much about their advanced, they call it advanced FX strategy. It's very much a Bollinger Band approach as well. So if you found today useful, that tomorrow will be a really good step up as well, because they talk about their different techniques of using Bollinger Bands in particular. Live analysis obviously every Tuesday. We've got the head of the CEO of AutoChartist next Thursday talking about, next Wednesday, with his part 2, and that went down really well last week, so do get yourself to that if you can. Scalping, Jay or Kay, I don't know who's running it, we'll talk in a bit more detail in the shorter time frames next week. And then we got multiple time frame. I'll take more time looking at the higher time frames at the end of the month, and now we've got a really good webinar on cryptocurrencies and the future of blockchain and what have you, and it's already arrived, as they say. The future is here. So thank you for your time, everybody. If you haven't got the app, download it. It's great. It's very useful. It's got all the prices on, obviously. It's got our analysis on there. It's got all the news streaming on there as well. It's a very nice little app as well. They've recently upgraded it. So our analysis is on analysishotforex.com. Email me at webinars@hotforex.com if I didn't answer any of your questions. I know there's lots coming through there. I haven't explained anything very clearly. And join me at Stuart Hot Forex Cowell. That's Stuart Hot Forex Cowell on Facebook, and friend me there, and I put stuff up there as well as on this analysis page. So thanks again, everybody. It's been I've enjoyed it. I hope you've got something out of that. If not, let me know. Obviously we want feedback. If you want different webinars on different topics, again, let us know. We're here to help. Okay, so thank you very much, and we'll see you again next time. All the best. Thank you.